They're gonna give you a $500 trade line and you're gonna pay $5 a month. What's going on YouTube? Welcome to Currency Counts, where I cover all things money. In today's video, I wanted to talk about self-credit. Now, self-credit is a credit builder that approves you without a hard pull on your credit report. I have made a few videos on the past of self-credit, but since then, a lot of other credit builders have popped up. On top of that, there's this one question that I often get asked about self-credit. So hopefully I can clear that up today. Let's get into it. So I'm here at their website, self.inc. So the way self works is you apply and get approved. It's not a secured loan. It's actually an unsecured loan, meaning you don't have to put any money up front. You're just gonna pay your monthly payment. At the end of the term, whether it's 12 or 24 months, you're gonna get a lump sum back. In the case of the small builder, it's gonna be $520. In the case of the XL builder, it's gonna be $1,663. But you are gonna have interest and admin fees, $89 here, $125, $46, and $146. So the cheapest out of all these would probably be the 12-month $48 credit builder, and you'd get back $539. So if you're looking at small, medium, large, XL, I'd probably go with the large because it's going to be the cheapest builder out of all of them. But if you're just looking solely on price and how much you're going to pay per month, I'd go with the $25. It is going to take longer because it is going to take 24 months to show that account paid in full. The $48 a month is going to show 12 months. But if you are trying to build credit quicker and do have some extra money to put aside, try going to your local credit union. So you're gonna go to your local credit union, you're gonna apply for a secured loan. Minimum is gonna be $500 at most of these banks. You can't put down more. Now what you can do with that $500, you can spend it and just pay the loan back. In this case, the term is 6 months, not 12 or 24 months, or turn right back around and pay that loan off right then and there. It's gonna show an account paid satisfactory on your credit report. And that's really what you want. You wanna have as many accounts as you can, paid in full, paid satisfactory. Now what you can do from there is take out another secured loan with that same $500, and now you can let that sit for 6 months, and you're going to show 6 months of satisfactory payments, and the interest on that is going to be crazy low. You're only going to end up paying about $5-6 in interest versus the $46, which is the lowest here, or the highest, which is $146. But if you're looking for an easy credit builder to get into, and something that I also have myself that I really suggest, is Kickoff. With Kickoff, they're not going to do any hard pull on your credit report. They're not going to check your credit at all. And the way it works is they're going to give you a $500 trade line and you're going to pay $5 a month. It used to be $2 a month. Now they raised it to $5. There's going to be no interest on that $500 trade line. One thing I will point out is this is strictly for building credit. That trade line's only going to be good for the Kickoff store. And a lot of that stuff in the Kickoff store is like overpriced ebooks, stuff like that, stuff you really will never use. I'd probably stay away from using that $500 trade line, but they are going to charge you $24, and that's as of this video. It might have changed, but it's $24, $5 a month until you pay that off. So another perk of self-credit is, let's say you have an account with them. After 3 months of on-time payments and having $100 or more into that savings account, you can apply for a self-credit credit card. And the way it works is you're going to take a portion of that money you put into your self-loan, and now you're going to fund your credit card. So it is going to be a secured credit card. But what's going to happen is that money that you moved from your self-loan into your self-credit card is not going to be reflected on your self-loan anymore. Now you're going to start from zero. Now you're going to owe the full 12 or full 24 months again. So what self is trying to do here is kind of keep you in their ecosystem, keep getting interest from you whatever way they can. If you're trying to build credit, this is a good product to consider as far as the loan, but not really the self-credit card. You don't want to do that. There are cheaper loans out there, credit builder loans out there that will approve you without a credit score. Like for example, the Tomo card. The Tomo card gives you an actual credit limit. Disclaimer, you will have to have a bank account with regular direct deposits into that bank account in order to be approved. And the way the Tomo card works is you get that credit limit. Let's say it's $500, for example. You can spend that $500. At the end of the week, you're gonna have to pay that balance off in full. One of the things that's good about the Tomo card is that you get 1% cash back, which is not a lot, but it can add up over the year, and you do get an actual credit limit. Another one is a pedal card. Now the pedal card, the same thing. They're gonna go off your banking balance and won't solely look at your credit history. Yes, they do check your credit score, but they're not gonna solely rely on your credit score in order to approve you. So if you have a decent credit score, your APR is gonna be lower. If your credit score is fair to bad, your APR is gonna be higher, but you actually get a credit limit and you get the whole month to pay it off. One thing I forgot to mention about the Tomo card. There's no interest. So you're paying no interest on that and you're building positive payment history. The name of the game is building credit with as little money as possible. Beware of these other cards, secured credit cards that will approve you, but you're gonna have to put that money down. What's gonna happen with those is the interest is crazy high on any of these secured cards that you take out, anywhere from 20 to 30%. On top of that, you're gonna pay admin fees, you're gonna pay miscellaneous fees for using your own money because they're promising rebuilding your credit. Now, the thing with rebuilding your credit is any of these cards, any credit card you take out, any loan you take out can potentially improve your credit as long as you have positive payment history. So if you look at any of these cards or products and they're promising to raise your credit score by 100 points, 75 points in a certain amount of time, they really can't be promising that because it's really not true. Everybody's credit situation is different. You might have a collection on your account and you take out one of these credit products and it will improve your credit, but not by a lot, not by 50 points. Now, you might have somebody that's brand new to credit, 18, 19, 20 years old, that's never had a credit card before, has no accounts on their credit report. They take out one of these cards in a month, you're gonna see that credit score go up by 50 points. So just be aware of your credit situation before you apply for any of these products. I will leave a link in the description for everything we talked about today. I hope this video helped you out. Check you on the next one.